Welcome traders. We are going to look at SPX on multiple time frames, just the higher time frames, monthly and weekly, and we'll go through the other indices to get a visual on things. But with SPX and SPY, we'll look at the indicators as we always do. And today we're going to focus on the same thing as last week. In a sense, we're still looking for, we're so close to all-time highs, right? So we're still looking to see if there's a lower high or a higher high to come. And I have evidence that we still might get that lower high here. And so I want to show you that. And the options expected move for the week is plus or minus 120 points. So still just still a trader's market. Volatility is high. You can trade these moves. We got a nice move to the downside last week, caught that, took profit, and price did jump higher, but we just shorted it again because we're right in that zone. And I'll show you exactly where that is. So make sure you stick around. Play this at 1.25 or 1.5 speed so you can get all the information here. It's super important. And I know that we watch other YouTubers, YouTube videos, and have other things to do. Life, right? So make sure you get this information quick. And let's jump into it. We have SPX on the monthly time frame. And I'd like to start here because we have that 2000, the 1929 top, 2000 top, and 2025 in confluence with the 2008 top, 2022, and 2025. That's where we had our reaction from. That's where we had the tariff crash, if you want to label it, like the Corona crash, tariff crash. Everything ends up with a label, right? We have to rationalize it. In my opinion, I'm a technician, so I look at the charts and then we can see what the news is afterwards. I forgot who quoted that. All right, so let me show you the example while we're on the monthly time frame. You have the 2000 top here, and you have the 2008 top. So what we're going to focus in is in 2000, after the nice drop here, you see that same wick, the same thing that's happening right now. Now I know that price action has another monthly. We'll go back and look at the whole point is after the first initial drop, we had a retracement of 88.7%. Price made like $1 and something over it. Okay, rejected off the 887, bear market. In 2008, we had the high here, had that nice reaction. Same thing. Look at that monthly bar. Well, this looks exactly like what's happening now. And we made a higher high before the market turned over and bear market. So let's look at now. Where are we at? We're here. We had our top. We had our reaction. Are we going to make a lower high or a higher high? I'm going to draw a retracement here, and it's not going to be perfect. I'll take off all the other. Boom, boom, boom. Make that red because it's a resistance. And now we're there. All right, we had our reaction. We're right at that 887. Are we going to get some sort of reversal candle? Are we going to reject off of here? Possible. We are in a bullish stance. We have the 8 EMA and the 20 trend indicator heading higher. So we're in a bullish posture, but we're at resistance and we're in the volume node right here, right now. All right. So that's what we're looking at. This week will be a very telling week. Now, we do have plenty of time on this month. So this monthly candle, we could make a new all-time high on this monthly candle and still have a wick underneath this 887. So there's stranger things that happen. That's why we do full analysis on all different time frames. Okay, as usual, let's check out the DMARC. And close this window as well. Okay, the sequence, we're at a 1, and we're back into this this previous sequence in the red here at a 6 so far because we're not underneath the last two candles beforehand with this count, right? We're getting back over some of those candles. Options tender. This is our setup with this is our traditional setup with the MACD, RSI, and slow stochastic. And so we have this looks really similar to the daily time frame. Momentum is rolling over. On the MACD, we have our cross here. After this large move, it appears we're trying to get back into a bullish state. It's not going to happen, folks. All right, I'm telling you now that it's just highly unlikely that we cross and continue higher. Now, with these historic trend lines above us, resistance that we're at now, it's more likely that we start heading to the downside. Now, one thing that we can look at is if we do eke out a new high, we'll officially have negative divergence on the monthly time frame, and also another peak here in the RSI for strength. All right, on a negative divergence. Same thing with the slow stochastic. And so on this monthly time frame, we want to see this start to roll over. So this is a much more sensitive oscillator for momentum. It's creating a headwind on the bearish crossover. So we're just really kind of going sideways, this price action, right? We're just going sideways. We haven't really gone anywhere. We're back right where we started with the last sell-off. Let's go to, we're not going to look at anything else on the indicator. So let's just go ahead and go to Qs. Now in the Qs, same thing. We're really, really close to all-time highs here. Are we going to just get above? We have this pivot above us. You could call it a valid trend line because we have the different touches on here. We'd just make one more high there. It's the same thing. If you look at the indicators, same thing that's happening on here. You have you would make a bearish divergence right here if we make the all-time high, and the Qs can make they're actually closer. If the Qs make an all-time high and SPY does not, that's, you know, that happens very often on lower time frames. You see it all the time. SMH still pushing. It's in all of this volume right now. This is highly unlikely to stick around this point. You have some distribution in this area. We're trading above right now. We're getting through that on the monthly time frame. I just don't see this happening. I think we're going to get a wick through here, and SMH is going to lead us to the downside. But price action is still in a bullish posture. Okay, we're above the 8. We're above the 20. IWM is not. All right. We had this top here. We have a top here. I think this is an expanded flat where we have a nice large 5-wave move to complete it. In other words, in A, we had this messy B expanding move. And now we're looking for an impulse wave to the downside. So what we talked about last week was IWM possibly pushing to the next fib level, which would bring us into that consolidation range a little bit higher. All right, about 216, I believe it was 215, and we're already just above the 50% retracement. So we'll see what happens here, but I think we're going to have a 1, 2, 3, 4, 5 headed lower if you're into Elliott waves. And again, so you see IWM is the weakest. It's just now pushing into its moving averages. DIA is getting over that 8 EMA. It's sideways, but it's getting over it. It's getting into that resistance zone, into this consolidation. It's really going to be telling what's coming up this week, in my opinion. VIX. All right, in this rising phase, we're going to test that 20 trend indicator. Let's see if we get our reversal anytime soon. On the monthly time frame, you can see that we still have our trend line here. If you just go with wicks and bodies and wicks here, we're still holding the uptrend. It's a little more obvious on this, and then when it gets messy on the lower time frames. But we're in that zone. We're getting into this basing here. We're back testing. SPX. Let's go to the weekly. On that weekly time frame, you see that we had this resistance right here, played fairly well, but then it had a classic trading pattern. Price got above, broke below, held on to that 20 moving average, right? That's our most important, in my opinion, the most important moving average that we could look at on any time frame to see where price is holding so far. So in a bullish posture, again, moving averages are coming together. We're heading higher, but the classic trading pattern, it's a peak above, peak below, and then holding on to support. Okay, so far bullish, and then like I said, we're in that 887 retracement. DMARC, we have a 6 count. Do we get a 9 count headed higher? That's what we'll be monitoring each and every week. Looking at the OptionsTender setup here, momentum is starting to cross into the bullish territory. We have a bull cross. Again, if we make a new high here, about 6,200, give or take. It's an ascending trend line here, so we'll see. Let me reset this. Okay, I had to reconnect. Thinkorswim's probably doing some maintenance on some things. That's a platform I use. TOS. Okay, looking at the indicators, we did 6 count. Looking at the MACD, RSI and such. So we're getting a bullish territory. Slight divergence at this point. We had the overbought scenario. We're making new highs. So far a lower high. Doesn't mean it can't go higher, but that's something to note. Okay? As the slow stochastic curls over. So let's see how this plays out. This could be an early signal that we're getting some momentum to the downside here in the faster moving oscillator, the slow stochastic. Okay, looking at the top here, let's just look at a couple of these spots where it curls over. So you start to make certain tops. We have a top here, all right, just a near-term top, and we peaked, and we're starting to diverge. We're getting crossover to the downside. Up here, we made a new high. So we have that top here. Let's go back to the other top. So we had another top right there. Okay, you look at the line that's heading up, and then we had the curl over. We started to follow that pretty quickly. No real divergence, but you could see after that next week, we already had that crossover and then the sell. So price held on, and you saw the oscillator move over. Even though this is already crossed, you saw price make a new high there. So we had another peak right about there. And so you had the lower high, and you see how price action was just moving sideways, distribution, and then we finally broke down from a technical trend line there, and price accelerated. So we have some trend lines to look at on lower time frames, but you got to look on Friday's video for that. We're not going to go through all of that right now. So let's go over to Qs. Let's get a weekly perspective. Okay, so we have this point of view right here. We have this bearish rising wedge, right? There is actually a trend line. I know I have it on NDX. That plays pretty well with the lows. Okay, so if you count this as a wave 2, however you count it, if this is all ABC for 1 into 2, you have wave 2 into wave 4, which usually is a good trend line here. But just take this pivot and look at that. price is just working against it, grinding up against that pivot. So we'll leave that there just for purposes of seeing how this plays out next week. But this, this is another sign that there could be a reversal off of this pivot. Okay. So looking at SMH, let's get a different point of view. The weekly, we had this bearish rising wedge, broke down from it, and now we're getting into maybe we have a little bit higher prices, and we know from the Discord that that Nvidia possibly could go to 145, and so we could see just a little bit higher levels here, right into that resistance point on this weekly time frame. So we'll keep an eye on that. I'm looking at sorry, you can hear the kids in the background. Again, we're into resistance at this point. We're starting to get over some of the moving averages. We have the 50 right above us. Do we go to test that? This is such a big zone. You see all these wicks here. So not necessarily that this is the perfect resistance point. We have some wiggle room, and then we'll see if what the weekly candle does for next week on IWM. And I believe this 50, it's right at that 60% retracement that we're looking at. And I can show you the here's the look that we have for our wave count. We have our A wave, our B wave, and we have a 1, 2, 3, 4, 5 impulse wave for a 1. And we're getting past that 50% there. And look at that. That's 217. 217 is our 62% retracement. So we could move a little bit higher here on the small caps. See if this holds up the market for just a little bit. I do think we should check out the bond. I showed the bonds in Friday's video. So check that out. The bonds, I believe, are in a perfect setup. You know what? Maybe I did that for members. I should probably show you guys what this setup is. And so I'll show you that on the daily time frame so we can get a really good look at that. Right, here's the VIX again. Holding this trend line up here. I know that we're down to the 100 moving average. I know we could probably draw this in a different way, but all right. So you have that trend you could work with here. Either way, it comes through just a little bit. We're into all this price action. We're making a higher low, higher low, higher high, higher low. So let's see what happens going into the 100 moving average, and we're into the range already to have a weekly low in, and so we will start to move in this rising phase pretty soon here, probably next week. Let's go to SPX on the daily. And the only thing we're going to show is the summation on the daily time frame. We go through these all the time. We had somebody point out this potential channel here for the Discord. If you're looking for just an ABC correction, maybe it's a larger degree. If this starts to break down, you're going to have a lot of people say this is just a larger wave 4, and that we'll get an impulse down to this point here, which will still be support, and we'll probably get a reaction off of there. My guess is that this would be the next wave 1 of 3, the wave 1 of wave 3, okay, heading lower, and we should get a reaction off of here. I have this here just in case this is part of a pattern. You have a bullish pattern here, and bringing this up here, as a matter of fact, you have a downtrend. If this holds, you have a downtrend and an uptrend. This could end up being some sort of sideways move, and you could even argue that if this is a wave 4, then we could head higher after a triangle. So lots of things to look at over time. That's why we draw these lines in, just to give us references. That's what they're for. We have a potential reversal candle on the daily time frame. We also have a bearish rising wedge that broke down, and we're forming another wedge here with less momentum. Okay, so you see this kind of leveling out a little bit more, not as steep as this move here. And I do think we're going to possibly get a reversal at this point, but we're still holding a bullish posture, 8 EMA. Trend is up on a 20 moving average. So, price needs to prove itself to the downside. And McClellan summation. This is what we're paying attention to. Yes, I haven't looked at this since last week. So this is holding up some great progress here. So this potential channel here we drew in here last week, if you want to get the full analysis and how we talked about it last week, you can check that out. But we're a potential channel that's moving lower, and I compared it to a past channel. So I'm not going to do that again. Again, these you can look at this last week. But the new information that's on this indicator, this is important. Here you go. Higher high, higher high, lower high. Breadth is rolling over again. That's a really big clue that our top is in. Okay. And then if this does roll over, it needs to hold this area here and continue higher to get our alternate scenario where we can continue to move up higher. We'll probably get a bigger correction in here, to the 200 or to the 50. And we need to see this area hold, breadth get stronger, or the big tech stocks just do all the pushing after that and just go parabolic and just move the market by itself to the upside. So breadth is weakening. That's not a good sign for the market. That's a really, really good indicator. I love the McClellan summation and the oscillator that we use on every single daily time frame analysis. Okay, so compare these weeklies to the dailies. And now let's go to, enough is said here. Let's go to TNX. I believe it's CGI TNX. Oh. Here we go. 10-year note. And let me do something on the other screen. Okay, with the bonds, just with a naked chart here, it's just moving sideways. So we're in a happy place at this point. If a price action continues sideways, the market can go higher. But I want to note this. If these, and we had a big strong move on Thursday and Friday to the upside. If price breaks out to the upside, okay, you can draw, if you want to draw this out, it looks just like the bonds. It's the inverse. You have a consolidation here. If it breaks out to the upside, it's going to move quick. It breaks, and it's going to damage small caps. If it breaks to the downside, it's going to head down quick, and it's going to affect tech. Tech's going to drag the market down. And if it breaks the upside, that's bad. Okay, in certain cases where you're elevated, it shows the economy strong, and that's fine. Inflation gets out of hand, and this rises up higher. That's going to affect the market negatively. Either way this breaks out, it's not going to be pretty. But I stand, and my portfolio has plenty of bonds in it. My growth portfolio, my dividend portfolio, they have certain bonds in those. So I think the bond market is going to move steadily and quickly, and I want to get paid dividends while that happens. Let's look at my analysis. So far, lower highs. We had the bearish rising wedges that broke down. We had this channel that broke to the upside, but guess what? 1, 2, 3, 4, 5 wave impulse move. And then we have a corrective A, B, C. I think this is heading lower at this point. We built a trend here to see if price could hold for another wave to get us like maybe a 5 wave leading diagonal and continue higher. That did not happen. We broke down from the trend, back tested the trend, and guess what? From high to low of this impulse move, we had a 62% retracement. This is a perfect setup. We have FOMC coming. I think this accelerates to the downside. I have written here, sell small caps, buy tech when the interest rates were going higher. And all I mean is relative strength. Okay, it doesn't mean that the market's going higher or lower. It means who leads the market, lower or higher. This tech is relatively stronger in this move, and as it heads lower, small caps are going to be relatively stronger. Tech's gonna, if we sell off, tech's going to drag us lower. Okay. So that's what I'm looking at for the bonds. This is all that matters to me in the overall economy, this chart. Okay. The falling 10-year rates means equals a recession for the market. That's pretty much it. Did I want to show anything else? Boom, boom. We're looking at yeah, that's all I got for you guys this week. We want to keep it basic. All those indicators, they are, we're in a bullish posture with all of the trends and moving averages, but I think we're hitting a top, and I think we're going to roll over. The technicals, the breadth, all of these internal items are telling us that price is possibly going to move lower as soon as next week. All right, thanks for joining us here at OptionsTender. Have a wonderful day. Don't forget to like and subscribe, and check out Friday's video.